One of the most important parts of this strategy is knowing when to stop trading a coin. Because if we don't, we can end up with capital stuck and no movement. Before we get into how we decide, let's talk about why this matters. If we keep trading a coin without paying attention, volatility slows, orders stop filling, capital gets stuck, and we can end up in a position where neither our buys or our sells are getting filled. And our capital is tied up for who knows how long. Or we fill all of our DCAs and the price just keeps dropping. Now we're in a position where we either keep adding DCAs or we just sit and wait. And in more extreme cases, if a coin gets delisted, we may be forced to liquidate or move the position. So, ideally, what we're looking for is a coin that fills most of our DCAs, then rebounds. For us, that sweet spot is around 90% of the DCAs filling before a bounce. That keeps the capital moving and allows us to continuously create new stories with the least amount of an emotional interference. So, before we place another story on the same coin, these are the main things we look at. First is volume. We're always watching the 24-hour trading volume. If volume starts dropping quickly, that can be a sign that short-term interest is fading and volatility may start slowing down. Next is volatility. We'll zoom into the 1 to 15-minute chart and look for strong movement up and down. If the price action starts flattening out, that's usually a sign we don't want to open new stories. Next is overall price movement. If a coin has already run up significantly, let's say 100% or more in just 24 hours, that becomes a higher risk environment. And at that point, we're usually not chasing it. We'd rather wait for the price to come back down before placing new trades. And the last thing we watch for is a delisting risk. We want to avoid trading coins that may be removed from the exchange. And we typically monitor this through exchange announcements, emails, official posts, because once a coin is delisted, our options become much more limited. So, before placing another story, we got to remember we're always checking if the conditions still support the strategy. This isn't about forcing trades. It's about trading when the conditions are right and stepping back when they're not. And this is how we keep capital moving, avoid getting stuck, and stay disciplined. Trade the movement and not the coin. In the next video, we'll go over the biggest risks with DCA trading because there's always risks and it's important to understand them.